it has taken a little bit of that maturity to happen where today mutual funds are seen as a core part of people's portfolios. But that was not the case 25 years ago. And I think we have just started scratching the surface. So in many cases, we are telling people buy a product like a multi-cap, a sector like a multi-cap fund, where you're getting exposure across large, medium, small, or a flexi cap. These are categories where fund managers are allocating across capitalization. You could look at a large and mid. Any of these things which give you exposure to mid and small, right? The opportunity that we as an industry should also look at is to see that what is it that we can add value to investors who are used to that convenience of trading through a stock exchange platform, right? Not all the mutual fund schemes not necessarily available on stock exchange platform. What is it that we can do? Can ETFs be a way that investors get used to investing in a mutual fund and then they say, okay, this is probably a better way than me sitting and managing a portfolio of stocks.
क्या म्यूचुअल फंड सच में इतने सिंपल और रिवॉर्डिंग होते हैं? म्यूचुअल फंड्स को लेके मार्केट में इतना ज्यादा हाइप है, तो आज के एपिसोड में ये समझते हैं कि ये हाइप सच है या फिर देयर आर सम मिथ्स अराउंड म्यूचुअल फंड्स। हेलो फ्रेंड्स, वेलकम बैक टू म्यूचुअल फंड की बात। मेरा नाम नम्रता अरोरा है। म्यूचुअल फंड की बात में हम ग्लोबल और इंडियन इकोनॉमिक कंडीशंस, कमोडिटीज, म्यूचुअल फंड्स, स्टॉक्स, सबके बारे में बात करते हैं। ऑफ कोर्स largely about mutual funds. और आज के हमारे इस एपिसोड में we have Mr R Sivakumar. Mr Sivakumar एक्सेस AMC के इंसेप्शन यानी 2009 से ही कंपनी के साथ जुड़े हुए हैं और उन्होंने कई लीडरशिप रोल संभाले हैं। मार्च 2026 से उन्हें चीफ इन्वेस्टमेंट ऑफिसर के रोल में एलिवेट किया गया है। मिस्टर सिवाकुमार को इंडिया की एसेट मैनेजमेंट इंडस्ट्री में 27 साल से ज्यादा का एक्सपीरियंस है। एक्सेस AMC में अपने रीसेंट रोल में वो हेड ऑफ प्रोडक्ट्स, कॉर्पोरेट स्ट्रेटेजी, ऑफशोर बिजनेस और BIU थे। इसके साथ ही वो एडिशनल रिस्पॉन्सिबिलिटी के रूप में AI इन्वेस्टमेंट्स भी ओवरसी कर रहे थे। इससे पहले उन्होंने 14 साल तक हेड ऑफ फिक्स्ड इनकम के रूप में भी काम किया है। वो फोर्टिस इन्वेस्टमेंट, सुंदरम AMC और ज्यूरिक इंडिया AMC के साथ भी काम कर चुके हैं। क्वालिफिकेशन की बात करें तो उन्होंने IIT मद्रास से बैचलर ऑफ टेक्नोलॉजी किया है और IIM अहमदाबाद से पोस्ट ग्रेजुएट डिप्लोमा इन बिजनेस मैनेजमेंट भी कंप्लीट किया है। Hello everyone, welcome back to Mutual Fund की बात and thank you so much for joining us again this week. Like I said कि इस एपिसोड में या इस सीरीज़ में हम आपको आपके फंड मैनेजर्स से इंट्रोड्यूस करने की कोशिश करते हैं। वी ट्राई टू गेट द फंड मैनेजर्स, द CIOs, द पीपल बिहाइंड द पोर्टफोलियोज ऑफ ऑल द म्यूचुअल फंड्स, जो बेसिकली हमारा पैसा मैनेज करते हैं और हमें अच्छे अच्छे रिटर्न्स देते हैं। सो टुडे फॉर द वेरी फर्स्ट टाइम वी हैव विद अस मिस्टर R Sivakumar, who is the CIO at Axis AMC. Siva sir, thank you so much for joining us today. And you were very gracious to accept our invitation to come for this particular podcast. So thank you so much for giving us your time.
No, I'm very, very happy to be here. Very excited.
Thank you, sir. Thank you so much. So, Siva sir, today I actually thought that we've done a lot of podcasts where we've spoken to fund managers, CIOs, CEOs, where we've spoken a lot about mutual funds and different categories and how it works, which is fine, which is, of course, we'll have some questions around that for you as well. But today, I want to talk about a particular thing, which is, are mutual funds a reality or is it really a hype, right? Because there's so much that we talk about mutual funds. So I want your perspective on this aspect, and I have a lot of questions around this. I understand that you're not very comfortable with Hindi. So guys, to all the viewers, we may be having a big chunk of this podcast in English. So please bear with us, okay? So Siva, so let me start off with the very first question. In the first 4 months of 2026, we saw that the foreign portfolio investors, they sold almost 1.92 lakh crores worth of Indian equities, right? And this is much more than the whole of calendar year last year, that's 2025, which was about 1.66 lakh crores. So tell me, sir, why is this happening? And how does it impact mutual funds in general, or is there any specific category that this would impact?
Great question. So for this, the answer doesn't lie in 2026 or even in 2025. You really need to go back a couple of years because this foreign selling, this is not a recent phenomenon. It's been going on for more than 2 years, right?
Okay.
So we have to go back and see what changed from, let's say, 23, 24. And there are two big factors, domestic largely. One is the government started consolidating fiscal deficit after COVID. Just to put some numbers,
okay.
The central government's fiscal deficit had peaked more than 9% of GDP and today is 4.5%. When you add the states, the consolidated deficit had spiked to more than 13% of GDP and is now at a little over 7.5% of GDP. Now, why is this important? Add together the center and the states, the total budget spending, expenditures, just some simple addition is about 30% of GDP. Now, it's not comparable because GDP is what's called value added and all that. So, I'm not saying that's a strict comparison, but in terms of total expenditures, the government sector is very important for growth. And if that sector is consolidating and reducing its deficit, in a sense, they are cutting back on growth, it has a downward pressure on the economy. This is one very big factor which happened post-COVID. The second factor, which happened at the same time in 22-23, was the Reserve Bank of India was hiking interest rates. We saw short-term interest rates in India rise from 3% to 7%. So 400 basis points increase 22-23. Both these are downward pressure on the economy. When RBI hikes rates, you put a downward pressure on the economy. When the government cuts spending or cuts spending growth in order to reduce its deficit, it puts a downward pressure on the economy. Guess what happened? The economy slowed down. Last year, calendar year 25, the government projects that nominal GDP grew at just over about 8.5%. Nominal is what matters to us because sales, profits, all of our transactions are in nominal rupees. Nobody is bothered whether the real GDP is 7 or 7.5 or whatever. Nominal GDP, 8.5% is the slowest in more than 20 years, except for COVID. Okay. This is important because earnings of companies, sales, profits, growth is dependent on the overall economy. And if the economy slows down, your earnings growth slows down. It is expected, and most analysts' expectation is that at a Nifty level, for example, the profit growth last year is expected to have been about 8%, right? I mean, that's roughly, I think now we have gone through the earnings cycle, that's roughly in that territory. So it bears out that your economy slowed down, your profits slowed down. Now look at the position of a global fund manager sitting in some money center of the world. They can invest anywhere in the world. Why should they pay 20 plus PE to enter a market where the profit growth is 8%? 8%. Today, there are so many places in the world where you can get single digit PE, even today. And go back 2 years, China, entire Chinese market was trading at 9 PE. Right? So you have so many opportunities for a global fund manager. Why go to an expensive market which is also not growing that fast? Like compared to our past, India is a growth market. If India slows down, the rationale, we are expensive market, but we are expensive for a good reason. We are a fast growth market. If the economy slows down and if EPS growth slows down, why should a foreign investor deploy cash here? That is what we have seen over the last couple of years. That it is not that people have any problem with investing in India or anything like that. It is there has been money going out. That is the biggest factor, right? That has driven foreign money to go out. Now, the good news is that these factors are turning around, right? The governments have stopped consolidating deficits. Center's fiscal deficit, state fiscal deficit have now flatlined, which means there is no downward pressure on the economy from the government anymore. And the RBI has flipped and has cut interest rates, added liquidity. And of course, the third factor, which is the currency has depreciated, which is also a positive from a macroeconomic growth perspective. So for all of these reasons, the economy is now turning around. And government's estimates are 10 plus nominal GDP. If you believe the RBI, 4.5 to 5% inflation, even assuming the same 7% kind of real growth, we are looking at 11% plus nominal GDP 1 year from now. 11% nominal GDP means potentially we are looking at 11% or thereabouts earnings growth of large caps. So the same investors who were not willing to buy at 8% growth with expensive valuations, now valuations have corrected, markets have gone nowhere in 2 years. Earnings have gone up, even if it's at the rate of 8 or 10%. Suddenly you will find that we were compelling valuations and much faster growth. My belief is that over the next 3 to 4 quarters, you will actually see the return of some of these foreign investors.
Okay, wonderful. And just as the second part of my conversation, which mutual fund categories do you think will be impacted the most, or
it's a market segment, right? It's a market segment. When foreigners sell, the first question we have to ask is, what do they own that they can sell? Foreigners disproportionately own large caps And to the extent that some of the selling happened because of passive flows, which you also observe that there is a significant,
Right.
that's also
Right.
biased towards large caps. So you've seen a lot of the selling by
Okay.
foreigners in the large cap space. Second is that
Okay.
India, as I discussed, is not a growth, it's a growth market, not a value market. So people, foreigners who buy
Okay.
Indian companies tend to buy Indian growth companies. So you've seen sell-off in growth, you've seen sell-off in large caps in general, right? Where this has
Okay.
been balanced is by domestic flows, which has been supernormally strong.
Yeah.
We've seen more than 3 lakh crores of flows coming into mutual funds last year from retail investors into equities. Now,
Okay.
Indian investors are not buying and selling the same thing that foreigners are buying and selling, right? So we buy
Right.
a much more broader set of companies. So if you see the companies that have outperformed, they are tended to be in the mid cap and small cap, where there is no foreign selling and there is a lot of domestic buying. So instead of looking at it as mutual fund category, if you look at the segments of the market which have been affected by the foreign selling and the domestic buying, you see a lot of pressure on the large cap space from foreign selling. But
Okay.
equally, you've seen support in the mid and small from domestic investors.
Okay. Okay. So, Siva, you just mentioned that, of course, there's a lot of buying in the domestic space, which is true, right? More than 3 lakh crores worth of inflows. So, tell us something. We've seen that in the last few years, there's a lot of marketing around mutual funds, right? There's just so much talk about it, mutual funds, Sahi Hai campaign, and wonderful initiatives. I just want to know. So, when we talk about investments, and everyone says mutual funds like the best investment. So, tell me, is that really true? Or is it the marketing that has made mutual funds look perfect?
So let me give you a couple of anecdotes from my own uh, story. I graduated college, B school, almost 28 years ago, and I joined Indian asset management industry, mutual fund industry. This is all I've done. I mean, I'm a complete believer in this business. I think I mean, for so many years after I joined this business, in every meeting we used to go out there and first start by explaining to investors what is a mutual fund. That is a regulated
Okay.
entity. This is not something where people people will run away with your money. It's this what is who is a regulator, what is a protection. Today it is taken for granted, right? So the thing is, it has taken a little bit of that maturity to happen where today mutual funds are seen as a core part of people's portfolios. But that was not the case 25 years ago. And I think we have just
Yeah.
started scratching the surface. If you look at the penetration of mutual funds in India, I mean, if you take a look at the total number of investors who have MF folios, it's of the order of 5 crores for a
Yeah.
country of our size. I know that you
Yeah.
guys run a very large stockbroking platform. There are more than 13 crore demat accounts.
Yeah.
Even compared to the
Yeah.
stock market participation, mutual fund industry penetration is still low. I think the journey has just started.
Yeah.
Having said that, you know,
Okay.
sometimes you get a feeling that at least for some segments of the people, they think that mutual funds will solve all of my problems or this kind of investments will solve all of my problems. I had again a personal anecdote. How generalized this can be, I don't know. But I met somebody who's generally having a conversation on portfolio diversification. And he said, my portfolio is बहुत diversified. It's very diversified. What do you have? I have equities, I have mutual funds, and I have SIPs.
Okay.
so, so you know what? One on the one level, we look at it and say, okay, we've done a good job of educating people what a mutual fund is and
Yeah.
why SIPs are
Yeah.
important. But maybe we become too successful in some cohorts by trying to almost say that this is a new asset class. It is not. At the end of the day, that money is still going to work in
It
the
is not.
markets.
Yeah.
So, so I
Yeah.
think
Yeah.
there is more work to be done from the industry in
Okay.
trying to explain to people that yes, this is a great investment opportunity, but please understand where the investments are going after all.
Okay. 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 So now, since you've been interacting with so many investors and you've already given so many anecdotes in this answer, tell me what is the biggest myth that you have come across about mutual funds?
So
The biggest myth.
there are a few. One is that if you look at, especially for retail investors who have invested in mutual fund, we are seen as only equity. Right? I think the
Okay.
space outside equity is really only known to very few investors. There are
Yeah.
Especially, I think evolved high net worth, those investors look at hybrid funds, they look at arbitrage, they look at debt funds. Uh, even a simplest product like a liquid fund, which is probably a better product than a short-term deposit, and it's still not penetrated. So I think we have there are so many places where we still haven't even uh, um, um, started approaching investors from that perspective. I think investors look at mutual funds as a way to get rich quickly through equity investment. But I think it's a way to build a portfolio, it's a way to build wealth. And you need to have a portfolio approach or an asset allocation approach. And the industry has all
Right.
these products. Whether it to look at, you look at the commodities, you have equities, fixed income, multi-asset kind of products. And so the opportunities are there, but I think it is very, very underpenetrated.
Okay, okay. So, I think the biggest myth that I have come across is, as you had mentioned, people believe that SIP and mutual funds are
Yes.
different, right? So a lot of people say, okay, should I invest in mutual funds? I already have SIPs
Yes,
running, right?
it's the
So,
same.
yeah,
Completely agree.
yeah, yeah,
It's a and I, it's a, in a way it's good because it's behavior, right? Rather than seeing it as an asset class,
it's
SIP
behavior.
is driving a certain type of behavior, and equity investments or
Yeah,
mutual fund
yeah,
investments is driving a certain different type of behavior, which is good,
yeah,
right? When
yeah.
you look at when you look at the success that industry has had in terms of attracting flows in the last few months and years, post COVID, it's the first time in my career, and I've seen this now multiple such cycles, where the inflows have continued when markets go down. In any
Yeah.
previous cycle, you go to global financial crisis, you go to dot-com crash, every time market goes down, SIPs stop, redemptions happen. In fact, SIPs get redeemed, or the outflows begin to happen. Post COVID is the first time where every time market falls, inflows go up. The last
Yeah,
couple
yeah,
of months
yeah.
also have seen,
No, but I think,
yeah,
yeah. No, but I think even like when we look at GFC or when we look at the dot-com crisis, I think that was I mean, that was really, really long back, and maybe education at that point was not so strong about
correct,
mutual funds. I think in the last 10, 15 years, it's become much better. And
absolutely,
that's why post-COVID,
yes,
we saw a
yes,
different
and
behavior. Yeah.
therefore the use of mutual funds not just as a way to, as a trading to just make money in the short run, but rather can I use this
Yeah.
to add to my wealth in the medium to long run? I think that change in behavior has happened.
Okay.
And it is the step one, right? We've only seen this for the last 5 years. Now imagine if this kind of capital formation in India happens for the next 25, 30 years, right? We will be looking at a very, very different industry.
Yeah, yeah, absolutely. So, tell us something, Sivasa. For a lot of people that at least I have interacted with, they say that I want very good returns from my mutual funds. Right? I'm taking little lesser risk compared to direct stocks, but I want good returns. So, do you think people are looking at mutual funds purely from a return perspective nowadays, or do you think they're looking at mutual funds to achieve their financial goals?
I think a lot of investors who invest for the first time, they invest probably with that short-term approach. Whether they are investing in
Okay.
mutual funds or stocks, very often they come into the markets for the first time thinking that everybody around me is making money. I also want to make money. I can also invest in stocks, or I can also invest in mutual funds. After a few such trades, you figure out that this is slightly harder than it seems to be. Right? Either as an investor, you need to spend that much time in the market, understand stocks or understand styles, and invest. Or you say, okay, I'm going to just buy a fund for the long term and let the fund manager figure it out. So this
Right.
transition it takes a bit of time and maturity. It is not something which is yet automatic for us, right? It takes a little bit of time for investor to take that view that, okay, if I let me give you a simple example, right? When you invest on the basis of just the past 1 year return or 3 year returns, which is very often the case for many investors, they just buy on the basis of past return. Now
Correct.
when does a past return look the best? At the top of a cycle. So then what happens? Market may correct. So first time that
Yeah.
happens, you lose faith. But then you realize that had I invested at the bottom of the cycle, I would have made more money. So the
Correct.
that happens only when you see, or you get advised that this is a better time to buy, or this is approach. You have to take an SIP approach, or you need to take some kind of a, what's what they say, right? Time in the market is more important than timing the market, right? You cannot time. If you just
In the
go by
market.
the
Yeah.
basis of short-term returns, that's a difficult thing. The second thing here is what are you investing for? Okay, this is important. Suppose we have got investors who are, let's say, in their 20s, and they are looking to build their cumulative wealth over their lifetime. For example, for retirement in their
Right.
60s, so they have a 40-year time frame ahead of them, and they invest on the basis of last 1 year, 3 year returns. How is that correlated? Meaning, how does last 1 year or 3 year tell you anything about what's going to happen over the next 30 or 40 years? So it is
Yeah.
very important to act with a little bit of humility. I can also tell. I mean, again, my own personal experience. I mean, if I had asked me in 98, 98, 99, 2000, at the peak of the .com, that what will the market look like 25 years from now? Well, no, there's no way I would have predicted. And I think it is very
Right.
important to act with a little bit of humility that the we cannot exactly predict. All we can say is that over the long term, we are talking about 5 years, 10 years, 15 years, and more, that markets will give you suitable returns. Yes, there will be along the ride along the way will be bumpy, but it will give you long-term returns which are better than safe assets, and that is really what it is about.
Okay, okay. So, there are a lot of people who look at, who say that mutual funds are for diversification, which is true, right? We always say that mutual funds help you diversify your risk, and it helps to reduce the market risk. But tell us something, do you think over diversification actually helps in reducing market risk? Because I've seen people who add a lot of funds to their portfolio saying that now my market risk has gone
Yeah.
down because I've diversified it really, really well. So, what is your take on over diversification?
If you buy the entire market, whether through a mutual fund or buy all the stocks in the market, you will essentially get market returns. You're not going to get excess returns. So there is no negative to diversification except that you're not going to get excess return. Okay, so let's get that out of the way. The
Right.
key problem with over diversification is that you own the market. You will buy everything, every style, every segment of the market. Beyond a point, your returns at a portfolio level will be similar to that of the broad market. That's
Okay.
an acceptable way to invest if you look at it from one angle. But then the easiest way to do is to just go and buy some passive funds or something and sit on it. Why go through all the effort of accumulating a portfolio if you just are going to anyway buy the entire market? The right approach would be to take an approach and say that, okay, what are the risks I want to run? Okay. So, okay, look at it from the perspective, how much do I want a large cap, mid cap, small cap? So the longer my horizon is, the more I'm okay to buy a mid cap or a small cap because I can take that risk even if the
Right.
short term there is some volatility. Okay. That's the way to look at it. The second way to look at it is that, okay, how much do I want in equities after all, versus debt or versus a gold or versus something else, right? So these are the questions you should be asking yourself. How much do you want to buy in growth style versus value? How much do you want to buy in, I think from an investor perspective, those are the questions that we should be asking, that what segments of the market, what are the styles I want to have, and that will make a larger impact
Okay.
than
Okay.
trying to just diversify for the sake of diversification.
Okay, okay, okay. So, since we're talking about funds, we're talking about diversification, different styles that the investors could look at, etc. So, tell us what are those equity fund categories, maybe in the active fund space, that an investor can add in his or her portfolio, and which are like the must-have equity fund categories in your
Yeah, sure.
opinion,
Thanks.
in the
Okay, yeah,
portfolio.
these are good questions because, as I mentioned at the earlier, there is a stark difference in performance between large caps and, let's say, small caps, right? Last year,
Right.
in 2025, large caps outperformed small caps massively. In 2026, small caps outperforming large caps massively. Why has that changed, and what is driving that performance? So last year, the biggest impact was the tariff situation, right? Now,
Right.
inherently, the tariff, is macroeconomically not very important. India does not have so much of exports to GDP. Exports, therefore, are low. Therefore, tariff exports are also low. So, therefore, macroeconomically, it was not a big story. But what is important to know is that manufacturing percentage of GDP is also low. So, for manufacturing companies, exports is significant. So the manufacturing sector was decently affected by the tariff situation last year, right? And
Okay.
where are the manufacturing companies sitting? Are they sitting in your large cap? No. Large cap is full of banks, IT, FMCG, auto OEMs, and all of these
Correct.
sectors, which are largely driven towards either domestics or services, or both. Right? There was no tariffs on services. So the large caps relatively insulated last year when all of this turmoil was happening in exports. Your mid cap and
Right.
small cap is where you have a higher share of manufacturing, and those got impacted more. The moment that situation turned around, and you have the tariffs getting ruled illegal, FTAs being signed with Europe, with UK, with other countries, potentially an FTA shortly
Yeah.
to be signed with the US, you have seen a turnaround. And I think if you see already from December quarter, you had started seeing mid caps and small caps show double digit profit growth when the Nifty was only showing single digit profit growth. And even the current
Right.
quarter, March quarter, the same trend is persisting. I think we
True.
are looking at a cycle where the large caps, I think, will come back once the macro comes back. But I think the mid cap and small cap outperformance in terms of growth will continue. That I think is a core part of asset allocation right now. You have to be more in the mid cap and small cap. Now, having said that, that segment is also more expensive. We have seen a correction in large cap
Okay.
valuation because markets have gone nowhere, whereas mid cap small cap indices have roared back to new highs, etc. Right? So there's also something to keep in mind that the large cap today has better value relative to mid cap market, and nothing is like a pure value, but just in terms of
Okay.
relative, right? So how do you play that? If you have much stronger growth in one category, which is slightly more expensive, and other category is showing lower growth and slightly lower valuation, where would you like to go, or how will you balance your portfolio? So in many cases, we are telling people buy a product like a multi-cap, so a sector like a multi-cap fund, where you're getting exposure across large, medium,
Right.
small, or a flexi cap. These are categories where fund managers are allocating across capitalization. You could look at a large and mid, any of these things which give you exposure to mid and small, right? Pure large cap or only it's a good from a defensive perspective, but that is not where the growth is. And India
Okay.
is a growth market. And if you take the approach that first where is the growth, then ask the question how much valuation I'm willing to pay for that growth, right? If you take the approach that
Right.
what is cheap, you'll never invest because nothing is cheap.
True.
Okay, so
Yeah.
important thing is where is the growth,
Okay.
how much you're willing to pay.
Okay. So then you're saying that mid caps and small caps are the must have categories in an investor's portfolio,
I would think have a reasonable
irrespective
exposure
of.
right now to mid cap and small cap. Don't hide
Okay.
only in large. Take a multi cap approach or something like that if you really want to diversify. Those are the ways to play the market right now.
Okay.
Again, having an entire
Okay.
portfolio in mid cap and small cap exposes you to significant risks today in terms of valuation. Let's say, for example, this impact of this third Gulf War persists for 6 months. You could see further stresses emerge if this war persists for some time, right? So then what happens? Then if the
Sure.
market corrects, then you have more challenge in the mid cap, small cap space. So it's very important that when you are making these investment decisions, keep in mind what potential risks there are. So we are quite bullish on the overall state of the economy and markets, but we have to be very sensitive about where you are at any point of time.
Okay. But do you think when we look at actively managed funds, we could look at maybe mid and small caps, but maybe for large caps, we could look at a good index fund?
I think,
Do you
yeah,
think that would be better, or a good large cap, actively managed fund also is fine?
I think index funds are very important from a customer's portfolio perspective. But where do we use index funds
Okay.
is also very important, right? So, for example, if you want a specific exposure to a segment of the market, maybe you think that I want to buy defense. Now, there are so few listed
Right.
defense stocks that it is not possible to create any kind of active management in defense. So might as well buy a passive because anyway you
Right.
want the sector exposure. It doesn't matter to you what alpha there is in the sector, right? If you want to buy IT, which has got beaten down. Okay, would you like to buy IT as
Right.
a sector fund? Then you just buy a sector index fund or an ETF, right? It makes a lot of sense. For most investors, if you're buying large cap as part of a multi-cap strategy or a large mid cap, you're anyway getting active exposure
Large cap
in
exposure.
large. I think that makes sense. Yes, you could buy a large cap index fund.
Okay.
I have no issue there. It's part of portfolio approach. But I think where passives really add value is if you want to buy something specific. Like there are these funds which are also giving you factor exposures, low volatility, quality or growth or value, etc. Right. So if you feel that your
Right.
portfolio has got over biased in any one direction and you want to take a different exposure or you want to add some specific exposure, that is a very easy way
Okay.
to use passives to get that specific exposure. And if you want to generally diversify, you just buy sort of multi-cap, flexi-cap kind of a thing, which gives you a go anywhere strategy.
Okay, okay. So, like we were discussing about returns as well, and you said that, for sectoral funds, you don't have to look at alpha just by the index, and that should be enough as long as you have enough sector exposure. So, returns do become an important part of investing in mutual funds, right? I mean, the reasons why, as Indians, we have graduated slightly from a fixed deposit kind of an investment to mutual funds is because we want better returns, and we are probably no experts at buying stocks, so we're like, ठीक है, stocks तो छोड़ देते हैं, म्यूचुअल फंड्स के थ्रू थोड़ा बेटर रिटर्न्स लाने की कोशिश करते हैं अपने पोर्टफोलियो में. सो टेल अस शिवा सर, what kind of returns can we expect from our mutual fund portfolio?
With equities, first
What should be a realistic
yeah.
expectation for an investor?
In the medium term, if India can deliver 10 to 11% or 10 to 12% nominal GDP growth, then you expect large caps to give you returns or in terms of growth similar. And ऊपर नीचे होता रहेगा because markets are volatile. So it won't be that every year you get the same return, but compounded over a longer period of time, earnings growth will roughly correlate with market returns. So if you get 11% long-term growth, your large caps should give or take that much. Right? Your mid caps, small caps have a chance to outperform because they are starting from a lower base and they're there, and eventually some mid caps will graduate to large caps and so on. Right? So there is an opportunity. So you do expect to get some excess return in mid caps. I'll be very worried, and sometimes that when you have such significant outperformance of mid caps and large caps that we have seen, then you wonder, okay, have I already eaten too much of my future returns? So keep that in mind. But in the medium term, that is the way to look at it. That can I get double-digit return from large caps? Can I get a little into the teens kind of returns from mid small, etc. Right? Is that possible? If that's possible, then that's a good place to be. That's a good starting point to think of where do I get the base. Then it comes down to, okay, if growth stocks outperform, then you get significant alpha coming from growth because India is a growth market. When last 5 years, so-called value segment has outperformed. But value segment outperformed, why? Because there was EPS growth in value. After the COVID and Russian invasion of Ukraine, we saw this supply chain, we saw China plus one, all of these things. So suddenly all the supply or manufacturing commodities, companies which had no growth for many years before suddenly started showing. Unprofitable companies became profitable. So that is where you see this kind of rebounds. But core of it is any segment you pick, which segment is showing higher growth than market? Typically, it will be the high growth, like for example, in the recent past, we have seen deceleration in FMCG, we have seen deceleration in IT. So those sectors have underperformed also, right? But this rotation will happen. So you see that.
Sure.
And I think that is how we expect to add alpha in the portfolio. That can we identify the sectors, segments of the market which can grow just a little bit ahead of the market and then allocate a little bit over there.
Sure.
I think if we consistently do that over a 3-year, 5-year period, then we should be able to deliver some alpha to the investors.
Okay. So how I look at my portfolio, because let's say I have my mutual fund portfolio comprising of 10 funds where I have maybe 5 or 6 good equity funds across different categories. Maybe I have 2 BAFs, 1 or 2 other categories. So I just feel as long as my total portfolio is about 12% CAGR, I'm okay. I mean, that's me, right? So for me, as an investor,
you have to have a benchmark in mind, right? There was a benchmark.
And that could be an individual benchmark for you. It doesn't have to be.
If you have a portfolio which is biased towards equities, a good double-digit return benchmark you should have. But that is not true for everyone, right? Like you mentioned BAF, etc. Right? So there could be a lot of investors who are more conservative, who will have a portfolio which is a lot more driven towards hybrids, fixed income, etc. Then please, mark yourself accordingly. Meaning you can't have the same expected return from fixed income as you got from equity. So let's make sure that we have more balanced approach when we look at certain other categories and don't expect that. Last year we saw extraordinary returns from gold and silver. Does that mean it will be giving the same return year after year? Unlikely. So the right approach is to look at it and say, okay, I do need a little bit of gold and silver in my portfolio, but it cannot be the only part of the portfolio.
Yeah. Thankfully, my mutual fund portfolio, I don't count my gold ETFs in that because I know with gold,
now we have
my returns
have added one more,
high.
Stocks, mutual funds, ETFs and SIPs.
And SIPs, true. Okay, now, I somehow I just feel today I'm asking all the questions that people ask me. And, I think I'm just going to steal all your answers next time the investors ask me these questions. I want you to answer this question for me. everyone says that, there are so many mutual funds which are there in the market today. And every fund has something good that works for it, right? I mean, so many AMCs, so many funds, so many categories. I truly believe that as an investor, it's a great opportunity, but at the same time, it's a very confusing scenario as well, right? Because how do I pick, if I want to pick, let's say, a good flexi cap fund or a good mid cap fund, good small cap fund, how do I select which fund, which AMC, which fund should I be selecting? What are the different criteria I should be looking at? So, can you help me understand what should be the right mutual fund picking strategy to win, to probably select the winning mutual fund for myself? And I know for everyone
Yeah.
that could be very subjective, but yeah.
If only I knew that, right? Then I would not be managing a fund. I'd be, making money investing. No, you can't. It's
Yeah.
one thing is investing is about balance of risk, which means you have to identify what are the risks you're willing to play at any point of time, and for that risk, how much reward am I going to get, right? That balancing is what investing is really about. It is not about predicting returns. No one can predict returns, but can I allocate where my money is going to the kind of segments, the risks that I'm willing to bear at any point of time. Like for example, at heart, like I said, we are believers in growth as a style of investing, but there are funds who have a more bias towards value or valuation as a style of investment. Right? They're completely different.
Right.
So as an investor, you should choose that should I be buying, how much of my portfolio should I be investing in a growth style and in a value style, and they will perform differently at different parts of a cycle, right? But you have to choose, right? Similarly, how much I'll allocate to large cap, mid cap, and small cap. To be honest, if you get some of these core things right, I can speak from an AMC and say Axis AMC funds are the greatest, but that's not the way to look at it. The way to look at it is, first of all, as an investor, what's the segment? AMC's decision is actually, or the scheme decision is the last. First, get yourself, what are the risks I want to play? What are the segments I want to play? And therefore, and how much? Right? Then you get those questions right. Then you can ask yourself, okay, if there are so many schemes in the market, so many of them who are biased towards growth, right? Which of them would I want to work with? Which are the AMCs I want to work with? Then you find that scheme in that category. It could be a multi-asset, it could be a BAF, it could be a large cap, large mid, whatever the category may be, right? Once you have honed down the process, then the selection process becomes much simpler, because otherwise you have thousands of schemes. How do you pick? You have to start first by looking at the risks that you want to play, the segments you want to play. That is the way to narrow the list. Then you look at, okay, which are the funds. Simple, I know that many people look at past performance, and it is very important to give you a sense of how this fund is doing. And that will also be one of the inputs. Size people look at, is it helpful? Yes, again, it's helpful. It's one of the inputs, right? But you cannot only make a decision basis only the performance or size or any one factor. Please first of all, look at, is that the right segment I want to be in? Just because small caps are outperformed shouldn't mean I have to buy small caps, right? I have to look at, is that the risk I want to play? Once you have selected that, you have so many small cap funds. Okay, then you look and say, within the small cap category, which are the risks I can play? Because again, there are risks. Some of small cap funds run very concentrated, very aggressive portfolios, and some run more diversified, more steady portfolios. Where would you want to go? So that those questions become easier to answer once you have narrowed down what risks you want to play. Once you have done all of this is like, building a thali. First dal chawal and your roti, basic stuff ho gaya, right? Then you start looking at mera namak, and achar and all the other stuff. How do I add to spice of my thali?
Yeah.
Then you can add sector funds, chahiye, international chahiye. I want some gold and I want some this, I want that. So all of those are the spice which you add on the side of your dish. It cannot form the core of your portfolio. Core of the portfolio has to be very simple. That is the only way approach you have to build. You have a fantastic platform. You can use your platforms like yours, which exists, which gives you so much data today. Again, investors, I'm telling you from my own past experience, all of you don't understand how lucky you are. Okay, so today there is so much information. Maybe it's information overload, but it is better than a situation where people do not even know what is in the portfolio, what is the difference between different schemes. Today the categorizations have made it easier. Data is available, research is available. We use it to your advantage.
So I think information overload is there, Sivasa, but I think even as investors, we can just pick and choose the information that we want to know about. We don't necessarily have to know everything or watch.
No, I think it's also important that you learn very early on as an investor, or at least in the first few years, that which are the sources of noise around you. which are the places which are giving you
Exactly.
a lot of news flow, or sort of that a dopamine hit of that, one incremental data point, but a lot of that, is that really adding value to your investment decision? If it is just, if there are too many calls to action, as you mentioned in one of your client portfolios, which was extremely diversified, you'll end up in a situation where you have too many funds in your portfolio, or too many strategies which are together not really doing anything for you. So it's
Doing anything
So I
for you
think
or
it's
adding any value.
So find the news sources, data sources where you build a trust, understand what their thought process is, work with advisors as needed, work with platforms as needed, because that is where you'll get information.
Okay, okay. So since we've been speaking so much about small cap as a category, let me quickly ask you about the Access Small Cap Fund, right? I mean, this is one of those funds which has outperformed its category and its peers over the long term. So tell me, how does this fund work? Is it truly a true to label fund, or what strategy does it follow to outperform its competition in the long run?
I think what has really worked well for us is taking that balance between growth and valuation. I'm using the word valuation advisory. It's not a growth and value. I keep coming back to the fact that there is no true value, but it is valuation. Finding companies which are able to grow, which is, if you ask me, there are so many companies in the small cap space which have the potential to grow well above broad market. But selecting the
Right.
companies which have quality that will sustain that growth over 3 years, 5 years, right? So there is a need to sustainably grow above market, and then have a tight valuation approach. I think that balance has worked quite well for us over a period of time. There are periods when this becomes quite challenging also, especially when you have entire market run up and valuations start looking expensive across the board. We do find challenging times. But I think the inherent philosophy has now stood its ground over a long period of time, that if you take a balanced approach,
Right.
we're not the highest risk small cap fund. We do not want to be. We know that there are ways that you can increase the risk by either concentrating the portfolio or biasing the portfolio in any one direction to kind of increase the risk and therefore potential returns. But I think we are kind of going for a more that sort of steady compounders, steady kind of growth stories, rather than to go for just the flashy names, etc. So it's worked quite well for us as a style. I expect we will continue running that as a style.
Sure. Okay, okay. So, now there are a lot of funds in the market, Sevasa, which also have foreign exposure, right? So, they have flexi cap funds, even a lot of multi asset allocation funds have exposure in foreign stocks. So, do you think that plays a major role in their outperformance or underperformance of these funds? So, do you think foreign investing in a particular fund, in domestic fund, makes a difference?
It does make a difference. So
on the positive or negative
so a
side?
few of
Yeah.
our funds also do that, including our large and mid cap, which has a significant exposure. But it's not, when you say significant, we are talking about 8 to 10% exposure. It's not a large part, but it's significant enough. And I think it does add a little bit of flavor to the portfolio, which is different from what you get in India, right? So this is also important, because let's take a case of what's going on in the globe right now. If you look at the biggest theme which is working over the last couple of years, has been this AI, right? Stocks in the AI
Right.
theme, whether that is semiconductors manufacturers and software companies, have done exceptionally well in this period of time. India is in contrast, the IT sector is actually seen as a loser of that AI trade. Now, how do you get exposure?
True.
So, one of the things that we have done is to pick and choose a few names in the global AI space, EVs. These are things which are where there is shall we say, the availability of stocks in the global market is much more, meaning that those technologies exist there, or those companies exist there, which don't exist here. So I think there is a space for global stocks in portfolios. Now, how do you invest? You can either buy an Indian fund which has some exposure there, or you can invest directly into global funds. Reality is that because there is a mutual fund wide limit for overseas investments, and that's more or less hit, you're not finding too many opportunities to buy funds which invest directly in overseas securities, right? That window is practically shut. But you can find open-ended funds which have some exposure to global markets. You can find, of course, other vehicles. The government is very keen to promote GIFT City as a means of both inbound and outbound investing for Indians. that I think is an opportunity that investors can take advantage of. So there are multiple ways that you can take some exposure to global trends. I think like I said, our own large and mid cap is one such where we take some exposure in, and a couple of other funds as well. But that where we take exposure to global markets.
Okay, okay. So now let me ask you some questions which are probably relevant to your personal investing. So, first question, can you talk to us, tell us about your personal mutual fund portfolio to whatever extent that you can? What are the different funds that you hold in your portfolio? How long have you been holding them? And you said that when you finished college, you started off with the asset management industry. That means you've been part of mutual funds for more than around 30 years now. So, tell us, what has your investment journey been like? Like, you've seen so much, right? The dot-com
Yeah.
crisis and GFC and everything. So what has your experience been like as an investor in the last 28, 30
I
years?
think I might still have some funds I may have bought back in, 99, 2000 or something around that time still in my portfolio.
Really? Wow.
Because I
Okay.
don't think I've ever redeemed,
Okay.
unless I needed the cash for some very specific purpose. I don't think I've ever redeemed from a fund. This,
Okay.
I think, and when you look back and you find a fund in your portfolio which you've held for 10 years, 20 years, and then you suddenly see, oh, I wish I had invested more. And then you remember that 20 years ago, I didn't have anywhere near the money to invest. So whatever I had, I invested and I'm
True.
happy about it. I think mostly
Yeah.
when you look back at your investment journey, the only thing is, oh, I could have done more. It's never a question of what would I have done. It's not about what else would I have done a different fund or a different thing. I don't think that is the question that's been on my mind. The question has always been, could I have done more then? But obviously with a hindsight, and there's no way to know at that point of time. So I think one thing is that. Second is that pretty much the only investments I have are in mutual funds, and I have nothing else. So basically, pretty much all my wealth is tied up in this industry. There is no other asset that I own. I think that's it.
Okay.
So I think if you look at my own personal journey, it's been, and I'm completely, like I said, there is something that has clicked with me with this industry, and that's why I've stuck around now on, like I said, almost 28 years. And so I think for me, I think this is it. I mean, this is the way I see myself building my own wealth and my own portfolio.
Okay. Can you give us a brief about the different categories, at least of the funds that you have, or the names of the funds in your
No,
portfolio?
can't. So I don't want to get into sort of names. Second thing is in terms of categories or in terms of asset. I have a fairly strict asset allocation approach. So I don't have anything which is pure only, entire portfolio is only towards equity or whatever it is. It's quite a balanced portfolio. So in that sense, that's again worked quite well. I think it's I've had a more or less an asset allocation approach forever. It's again not something new. And again, looking back, would I have said, okay, I could have had more equity versus fixed income because equities have outperformed over a longer period of time? I think, yes, again, looking back, you can always say, could I have done more? But I think the journey has been much smoother as a result of that asset allocation, and I have no regrets from that perspective.
Okay, okay. So, do you think first-time investors should look at ETFs? I mean, are you a believer of ETFs? Do you think we should have ETFs in our portfolio? And if it's a first-time investor, do you think ETFs should be a part of their portfolio, and why? I mean, what are some important points about ETFs that maybe we should keep in mind when we are looking at starting our investing journey?
So what does an ETF do for you that a mutual fund or a stock or something else cannot do for you, right? So ETF sits between investing directly in the stock market and a mutual fund. That sense that it is at the end of the day an index, so it replicates an index performance. You could buy an index fund or a sector or a large cap fund or something which kind of comes close to that, and therefore it's close enough to a mutual fund. You could buy the constituents of that index yourself and effectively replicate. So what does an ETF do for you? I think it does a couple of things. One is ease of transaction. You can just go and quickly execute it. As I said, for many investors today in the Indian investing segment, there are more than 13 crore demat accounts on trading accounts, and there are 5 crore mutual fund accounts.
Mutual fund folios, yeah.
What are the 8 crore people doing? And why can't some of those 8 crore people's first journey to mutual funds be through an ETF? Why cannot? So I think the opportunity that we as an industry should also look at is to see that what is it that we can add value to investors who are used to that convenience of trading through a stock exchange platform. right?
Stock
Not
exchange
all the mutual
platform.
fund schemes not necessarily available on stock exchange platforms. What is it that we can do? Can ETFs be a way that investors get used to investing in a mutual fund, and then they say, okay, this is probably a better way than me sitting and managing a portfolio of stocks, right?
Right.
Then the other value add that an ETF gives you is obviously intraday, right? That investors.
Yeah.
So that's a segment of the which is again to be catered to. I think so. ETFs do solve for a couple of very important investor problems. Ability to execute exactly when I want
Okay.
to intraday, or suppose there's a large fall in the
Okay.
market today and I want to get now. So those questions are easily handled. There are certain categories like gold and silver where you can only do ETFs, meaning as an industry we're not allowed to do investments directly in gold and silver except through funds, through ETFs. So in that sense,
Sure.
again, an opportunity for investors to look at, if I were to buy a gold instead of buying, we've seen a lot of proliferation of these digital gold kind of products last year, right? And then the regulator also came and warned about some of them. So in that segment, if you look at it, a gold ETF regulated product is probably a better product for many investors than to try to find something which sounds good but you have no idea what the provenance is, right? So I think there is an opportunity for a lot of investors, maybe first-time investors in to mutual funds, to use an ETF as their first investment choice, and then look at active funds as a way. Okay, if this is what the overall market gives me, can I then add active to give me a little bit of a edge? And that's maybe a way. We've seen a lot of investors go the other way, that they start with active funds and then some look at adding a sector fund or ETF or something to add a little bit of delta to the portfolio. But there
Yeah.
could be equally people coming the other way.
Okay, okay, okay. So, Sevasa, we are reaching almost the end of the conversation. So, let me ask you this. So, firstly, tell me, has there been any critical juncture in your life where your mutual fund investments have really helped you, right? Any critical time where you needed the money and you were able to take out or use your mutual fund investments for that particular scenario?
See, I think yes and no. Like I said, I've more or less never had to redeem. I've never touched. My investments are there for so many years that I've never really touched it. Uh, but yes, when you are at certain life stage points, when you need to buy a house or when you need to do something like that, you need to look at a larger shift in your portfolio. Yes, then you need to use that cash, and that I don't think I've ever been in a situation where I've sat and planned that out, saying that okay, I need to buy a house in 10 years and I start saving towards that. That has not. I mean, I know
Right,
we do look at that as an approach, a goal-based investing as an approach. That
right,
is not what I've done. I've looked at my overall portfolio and saying, okay, if I have this portfolio and I need to now, I have a large
right.
spend in terms of, let's say, buying a house or something. Should I take some money out of a fund to? So those decisions uh, aside, I don't think I've really had
Okay.
to exit any of my fund holdings, and I just let them grow. I just let them grow.
Okay, okay, okay. Last question, and then we have a very small segment after this
Sure.
question, which is a rapid fire. So the last question is there any uncomfortable truth about mutual funds that nobody's talking about?
Oh, that's a tough one. I wouldn't have been sitting in this industry for so long if I had lots of concerns and fears. That's really a tough question. I think maybe to go back to the first point that what have we still solved what mutual fund is supposed to do for you as an investor, right? I think we've got a lot of
Right,
faith from investors, and and I think that's fantastic. As an industry, we've done some phenomenal
right,
positioning right and got that mind share and wallet share of investors, which is fantastic. But are investors still seeing mutual funds only as a way to make money from equities? And that is one of the questions we discussed earlier, right? I think it's not about uncomfortable truth. It's just that I think we've got pigeonholed into one part of the segment. I think there is an opportunity for us as an industry to say that there are more ways to make money or to balance out your portfolio, which I think we have not done anywhere near enough.
okay,
Uh, there are other things
okay,
also. I think industry has come a long way towards making ease of transactions, etc., over a long period of time, right? 97, 98% of all the transactions, for example, at Axis comes now digitally, right? But why do we still have the 2%? So the question really is that
yeah,
what is it that is holding us back in terms of Why are there still so many parts of our industry which is still not made that much easier for investors, right? It's not again, it's not to say that is an uncomfortable truth. It's more that the project is still incomplete. There's more work.
At the very initial
There is
stages,
more
I
work
would
to be
say.
done. There's more work to be
Yeah.
done.
I think mutual fund project in India is at very, very initial stages.
Yeah, I hope
There's a
so.
long, long
I
way
mean,
to
like
go.
I do believe that we're just scratched the surface. There's a lot to go.
Yeah, cool, wonderful. So now we're just going to come to the last segment where I'm going to ask you some questions and I need quick answers. Okay, so maybe a one-word answer. If you want to explain, feel free to do it. But of course, ideally quick answers for these rapid-fire questions. Okay. First one, SIP without goals, good or bad?
Good. You want me to expand? Uh, so typically,
A little
sure,
bit
very
if you want to,
quickly,
yes.
do not wait, right? So basically, you earn as you go, right? You earn a salary or you earn whatever it is as you go. If you just when
Okay.
you just invest as you go, that's simple. SIP, if that gives you that discipline, use it.
Okay. Biggest mistake that people make during bull markets?
They ignore the fact that they are in bull market. They ignore the asset allocation. They ignore all the things that they started out to do by just thinking that
Okay.
this is fact of life. Yeah.
Okay. The opposite. Biggest mistake we make during bear
That's
markets?
been obvious over time, right? People exit in the bear market when things, that's the thing, right? That what was it Warren Buffett who said that if you go to the market and you find that apples are 10% off, you'll buy more, right? You go to a car shop and the salesman says they're 10% discount, you'll buy more. In equity markets, market goes 10% off, and the first thing is fear.
We tend to panic.
So I think holding
Okay.
on is
Okay. Okay. Is checking your portfolio daily harmful?
very. Uh, it is.
Yeah.
It has no value. It's part of that noise which I mentioned earlier. It has no value in making investment decisions.
Okay. Over diversification or under diversification, which one is worse?
Under diversification is worse. I've seen portfolios which
Okay.
are
Over diversification is okay. You're
over
still buying the whole
diversification.
market.
You
Yeah.
buy the market, you're still in with the market. Under diversification, we have seen people whose entire portfolios are concentrated in a very specific segment of the market because they've just started investing, seen the performance of a particular sector or theme, and just piled completely into it.
Right.
I think that's a bigger
Right.
risk.
Okay. Biggest mutual fund selection mistake that people make?
Invest on the basis of 1-year returns.
Okay. Okay. One sign that an investor is emotionally investing?
Emotionally investing, meaning investing on the basis of emotions.
Yeah. Yeah. What's okay? So I would say, like, if I was to answer this question, I would say that I would panic. So if I'm an emotional investor, I would panic at a time when my portfolio is going down. Though logically it should be the
And I
opposite,
think,
right? So
yeah, but I think those some emotions are harmful. Like you have this FOMO type of things,
okay.
right? Where people, okay, you look around you and somebody
Yeah.
else is making money. Am I missing out? Should I invest? Those can tend to be, and then when you add to that daily portfolio tracking, right? That kind of thing emotional investing can be harmful. But I think emotional investing in the sense of having a little bit of uh, humility, empathy, and trying to figure out what your portfolio should look like. I think there are not all emotions are harmful when it comes to markets.
Bad.
Yeah.
Okay. 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 Is FOMO more dangerous or fear more dangerous?
Fear is more dangerous. Fear is more.
Yeah.
If you sit out, you not a great example, but maybe I can still use it, right? I mean, if you had bought at the peak of 2007, 2008, and the top of that market, right? The next year you saw market fall by half. This large caps fall by half, mid caps fell by 75%, which means they halved and then halved again from there, right? Terrible time to be. But now looking back, the peak of the market then was 20,000 Sensex, and today it is 80,000 Sensex.
80,000.
So, which was more important? Okay, you would have made more money at the bottom by investing at 10K Sensex rather than 20K Sensex. But irrespective, 20K or 10K, you're better off in the market than not being in there, right?
They're not being in the market. True. Okay. Biggest asset allocation mistake Indians make?
Chasing, and I think, first of all, not having. and second thing is chasing, which means they don't stick to it, right? They just say that, okay, if for example you believe let's take a portfolio which is, let's say, 50-50 equity and debt. So if that is your asset allocation, right, you have a period of time when equities do really well and your portfolio is suddenly looking 55-45. Shouldn't you rebalance to exit equity and buy more debt? People don't do that.
Right.
What they do is they run more, and then they suddenly find that the portfolio has become too risky for their asset allocation after the fact, right? I think, that you need to have a investment plan and stick to it.
Okay. Obsession with gold that we Indians have, is it smart or is it emotional?
I can't be both. I think it is emotional, but it has worked. So can I say it is not smart?
Okay.
Both.
Fair enough. It has worked. Even if it's an emotional
it's
investment,
both. Therefore,
it
it's
has
both.
worked.
Yeah.
Okay. Tax planning, is it required at these days or no?
Yes,
You think
you
tax
can
planning is
do,
required?
and it's become a lot simpler in terms of the number of rates and number of decision points have come down. So therefore, there is less need to do. But for example, in fixed income, that's been a challenge for the industry. Debt funds, it's not that debt funds are taxed any worse than FDs or other debt instruments. It's taxed at the same rate,
Right.
but compared to equities, there's a large tax difference.
Right.
So how can you use tax to your advantage? By investing in multi-asset hybrid funds or arbitrage, etc., as a way to get better tax-adjusted returns. These things are very important. You need to keep it in mind. It does not mean that you have to only do it the basis of tax, but please keep it in mind.
Okay, cool. Wonderful. I'm done with all my questions. Thank you so much, Sivasa. It was wonderful having you on our show and a great conversation.
Thank you, Namrata.
I have learned a lot.
Thank you very
I
much.
do hope all the viewers have learned a lot from you as well. So thank you so much
Lovely
for your
conversation.
time.
Thank you very much.
Wow, that was such a wonderful conversation with Mr. Sivakumar. I'm sure आप सबको बहुत कुछ सीखने के लिए मिला होगा. तो जल्दी से जो भी हमने पॉइंट्स उनके साथ डिस्कस किए मैं आपके लिए समराइज कर देती हूँ. तो सबसे पहले हमने मिस्टर सिवा से ये पूछा कि क्या म्यूचुअल फंड्स रियली एक इन्वेस्टर के लिए बेस्ट इन्वेस्टमेंट ऑप्शन होते हैं. मिस्टर शिवकुमार सेज कि आज अगर हम एक इन्वेस्टर का पोर्टफोलियो देखें तो म्यूचुअल फंड्स उन एक इन्वेस्टर के पोर्टफोलियो का काफी कोर हिस्सा होता है, लेकिन ये सिनारियो कुछ साल पहले तक नहीं था. बट ही सेज कि म्यूचुअल फंड्स को लेके अभी भी बहुत सारा काम बाकी है, क्योंकि अगर इन्वेस्टर्स म्यूचुअल फंड्स में इन्वेस्ट कर भी रहे हैं तभी उनको शायद इसके बारे में उतना ज़्यादा नहीं पता है. दे डोंट नो हाउ इट वर्क्स. फॉर एग्जांपल, एक जो बहुत बड़ा मिथ है वो ये है कि इन्वेस्टर्स को लगता है कि एसआईपी एक अलग असेट क्लास है. फिर हमने मिस्टर सिवा से पूछा कि क्या इन्वेस्टर्स जनरली सिर्फ रिटर्न्स के लिए म्यूचुअल फंड्स में इन्वेस्ट करते हैं. तो मिस्टर सिवा सेज कि अगर आप देखें तो जो इन्वेस्टर्स म्यूचुअल फंड्स में इन्वेस्ट करना शुरू कर रहे हैं वो शायद शॉर्ट टर्म रिटर्न्स के लिए म्यूचुअल फंड्स में एंटर करते हैं, लेकिन देन दे रियलाइज कि शॉर्ट टर्म में म्यूचुअल फंड्स में रिटर्न नहीं बन सकते और आपको लॉन्ग टर्म के लिए इन्वेस्टेड रहना पड़ेगा फॉर यू टू सी रिटर्न्स. तो बहुत सारे इन्वेस्टर्स जो टॉप ऑफ द साइकिल पे एंटर करते हैं और जब उनको रिटर्न्स नहीं मिलते हैं तो फिर वो एग्जिट कर जाते हैं. लेटर दे रियलाइज कि आइडियली आपको बॉटम ऑफ द साइकिल पे शुरुआत करनी चाहिए थी या इन्वेस्ट करना चाहिए था. And that is why SIP को कंटिन्यू करना फॉर द लॉन्ग टर्म इज़ वेरी वेरी इंपॉर्टेंट. फिर हमने मिस्टर शिवकुमार से पूछा कि क्या ओवर डाइवर्सिफिकेशन से हमें बेटर रिटर्न्स मिल सकते हैं और इज इट गुड. तो मिस्टर शिवा सेज कि अगर आप अपना पोर्टफोलियो बहुत ज़्यादा ओवर डाइवर्सिफाई कर रहे हैं तो आपको रिटर्न्स मिलेंगे वेरी सिमिलर टू द मार्केट. तो ही सेज कि अगर आपने ओवर डाइवर्सिफाई किया तो आप लिटरली मार्केट को ओन करते हैं और शायद आप वो ज़्यादा अल्फा को जनरेट नहीं कर पाएंगे. तो ही सेज कि डाइवर्सिफिकेशन सिर्फ डाइवर्सिफिकेशन करना है उसके लिए मत करिए, डू इट फॉर द राइट रीजंस. फिर हमने मिस्टर सिवा से पूछा कि विच आर दोज मस्ट हैव म्यूचुअल फंड कैटेगरीज इन एन इन्वेस्टर्स पोर्टफोलियो. तो ही सेज, ही गिव अ नाइस एक्सप्लेनेशन. ही सेज कि अगर हम देखें तो लास्ट ईयर यूएस टैरिफ्स की वजह से मैन्युफैक्चरिंग सेक्टर में जो है सबसे ज़्यादा इम्पैक्ट हुआ था, विच बेसिकली मीन्स कि मिड एंड स्मॉल कैप में सबसे ज़्यादा इम्पैक्ट हुआ था बिकॉज मैन्युफैक्चरिंग इज मोस्टली मिड एंड स्मॉल कैप. लेकिन लार्ज कैप उसकी वजह से बहुत ज़्यादा इम्पैक्ट नहीं हुआ था. लेकिन आज के समय में अगर हम देखें तो large cap has relatively better value compared to mid and small cap. So he says कि logically speaking आपके पोर्टफोलियो में large and mid cap भी होना चाहिए और आपके पोर्टफोलियो में मल्टी कैप भी होना चाहिए, जिससे कि आप यू ओन एवरी सेगमेंट ऑफ द मार्केट. तो ही सेज कि आपको कोई कैटेगरी नहीं डिसाइड करनी चाहिए, यू शुड डिसाइड कि आपको कौन सा सेगमेंट ओन करना है. नाउ ही सेज कि अगर आपको किसी इंटरेस्टिंग थीम में इन्वेस्ट करना है, जैसे आपको आईटी में इन्वेस्ट करना है या आपको डिफेंस में इन्वेस्ट करना है और एनी थीम, तब आप यू कैन गो पैसिव, राइट? क्योंकि तब अल्फा जनरेट करना नहीं रहेगा. देन यू वांट टू ओन अ थीम और तब आप पैसिवली उस थीम को ओन कर सकते हैं थ्रू एन इंडेक्स फंड ऑफ दैट पर्टिकुलर थीम। फिर हमने मिस्टर शिवा से पूछा कि एक इन्वेस्टर का रिटर्न्स को लेके रियलिस्टिक एक्सपेक्टेशन क्या होना चाहिए फ्रॉम म्यूचुअल फंड्स, एंड मिस्टर शिवा सेज कि अगर देखा जाए तो लार्ज कैप फंड्स जो होते हैं दैट कुड बी लाइक योर बेस रिटर्न्स, जो आपको लार्ज कैप फंड्स शुड गिव यू रिटर्न्स वेरी सिमिलर टू द मार्केट। फिर जो मिड और स्मॉल कैप फंड्स होते हैं वो आपको थोड़ा बेटर रिटर्न्स दे सकते हैं, तो आप ये एक्सपेक्ट करिए कि लार्ज कैप से थोड़ा बेटर रिटर्न्स आपको मिड और स्मॉल कैप में मिलेगा। सो आइडियली आपको ऐसे सेगमेंट्स आइडेंटिफाई करने चाहिए, ऐसे सेक्टर्स आइडेंटिफाई करने चाहिए जो मार्केट को बीट कर पाए और आपके लिए अल्फा जनरेट कर पाए। सो लॉजिकली ही सेज कि एज एन इन्वेस्टर आपको एक इंडिविजुअल टारगेट रखना चाहिए कि मेरा ये डबल डिजिट टारगेट है, और उसके हिसाब से यू नीड टू इन्वेस्ट इन म्यूचुअल फंड्स, और ये ऑब्वियसली आपके रिस्क टॉलरेंस पे भी डिपेंड करेगा। फिर हमने मिस्टर शिवा से पूछा कि ऐसे म्यूचुअल फंड्स जो जिनमें फॉरेन होल्डिंग है, राइट, तो क्या हमें उनमें इन्वेस्ट करना चाहिए या नहीं करना चाहिए, एंड हाउ डू दे बेनिफिट अस। तो मिस्टर शिवा सेज कि ऐसे बहुत सारे फॉरेन स्टॉक्स हैं या ऐसे बहुत सारी थीम्स हैं जो इंडिया में अवेलेबल नहीं हैं। अब जैसे AI स्टॉक्स हो गए या फिर EV रिलेटेड कंपनीज हो गई जो शायद US में बहुत ज़्यादा हैं कंपेयर टू इंडिया। तो अगर आप ऐसे फंड्स में इन्वेस्ट कर रहे हैं जो ऐसे फॉरेन स्टॉक्स में इन्वेस्ट करते हैं, तो आपको इन थीम्स का भी एक्सपोजर मिलता है विच इज़ गुड। तो ही सेज कि थोड़ा पैसा आप ऐसे फंड्स में इन्वेस्ट कर सकते हैं जिसमें आपको फॉरेन होल्डिंग मिल रही है, फॉर यू टू गेट एक्सपोजर टू दीज थीम्स जो अभी इंडिया में या अपॉर्चुनिटीज़ जो अभी इंडिया में अवेलेबल नहीं। फिर हमने मिस्टर शिवा से उनके पर्सनल इन्वेस्टमेंट्स के बारे में डिस्कस किया, एंड ही सेज कि अभी भी उनके पोर्टफोलियो में ऐसे म्यूचुअल फंड्स हैं जिसमें उन्होंने शायद 99 या 2000 में इन्वेस्ट किया हो, विच इज़ मोर देन 27 years ऑफ होल्डिंग दोज फंड्स। तो ही सेज कि उनके पोर्टफोलियो में अभी ऑफ कोर्स इक्विटी एक्सपोजर ज़्यादा है, लेकिन ही रिग्रेट्स कि उन्होंने शायद बहुत ज़्यादा इक्विटी एक्सपोजर बहुत साल पहले शुरू नहीं किया, एंड बट दैट्स ऑफ कोर्स ऑल इन हाइंडसाइट। एंड ही ऑल्सो सेज कि जनरली वो अपने म्यूचुअल फंड्स को बेचते नहीं हैं अनलेस कोई गोल अचीव करना हो या फिर सम क्रिटिकल नीड, बट अदरवाइज वो अपने म्यूचुअल फंड्स जो इतने सालों से इन्वेस्ट कर रहे हैं उन्होंने होल्ड करके रखे हुए हैं वो सारे म्यूचुअल फंड्स। अंत में हमने मिस्टर शिवा से पूछा कि इज देयर एनी अनकंफर्टेबल ट्रूथ अबाउट म्यूचुअल फंड्स जो हम नहीं देख रहे हैं। तो मिस्टर शिवा सेज कि व्हेन इट कम्स टू म्यूचुअल फंड्स ही इज़ ऑफ कोर्स अ बिग बिलीवर, क्योंकि वो इतने सालों से या उन्होंने अपना करियर या सेट मैनेजमेंट स्पेस में शुरू किया था। बट ही सेज कि क्या इन्वेस्टर्स जो हैं रियली म्यूचुअल फंड्स में इन्वेस्ट कर रहे हैं फॉर द ट्रू वैल्यू दैट दे गेट आउट ऑफ इट, या प्योरली रिटर्न्स के लिए, ये हमें देखना चाहिए, राइट। तो ही सेज कि म्यूचुअल फंड्स अभी एक बहुत इनिशियल स्टेजेस में हैं इन इंडिया, एंड वी हैव अ लॉन्ग वे टू गो। So I think that's the wonderful conversation that we had with Mr. Siva. इसके बाद हमने उनसे कुछ rapid fire questions भी पूछे, and we got some wonderful answers. तो please जाके पूरी वीडियो देखिए अंत तक to see the rapid fire questions. So thank you so much for watching, guys, and please do like this video, share it with everyone, and please do subscribe to the Groww Mutual Fund channel, which is called Mutual Funds with Groww. So thank you so much again, and I'll see you next week.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.